All right, guys. So real quick,
Check me out. Look, I know perfect time. It feels like I'm too late.
okay, here we go. So I wanted to make sure that I went over this. I thought about this in my head, but I didn't. I don't know if I made a video. I went and checked, and I have not made a video on this. This is USDJPY, and the reason I'm going to make this video is because this is the first time I've spotted what would be the equivalent of an NZD drop, which is one of the strategies I've been messing around with and seeing um, in certain situations. And so I saw it inverted for the first time, is what I'm saying. And so just looking at this chart in recent days, can you tell me where you see it? Do you see it anywhere? The crowding, the drop off right after the crowding. I saw it right here. This is a move upwards and then a jump up. Okay. Um, so maybe it's not inverted because we would want to see like a drop down and then a jump up. But it's moving upwards and then it jumped here. It's moving and then it dropped. It's also moving upward here, but it dropped. So this is almost like an NZD type of drop as well. So we saw it happen 2 times in the past, couple days or whatever. Um, and so this is interesting. This is on July 4th. It went up like a rocket, and we could have caught that. We didn't, but I did identify the pullback here, this little pullback entry. So I want to talk about this pullback entry. I just ended up seeing that, so that was just like a side, an aside based on what I saw. But so this jump up here, and then we had some travel, and then an NZD drop here. So inverted NZD drop, and then an NZD drop. Very interesting price action. Something I'm gonna pay attention to. Maybe we should drill and really be able to count that as a strategy soon. Anyways, yeah. So the pullback was the play here. So I saw this jump up. This isn't something I trade yet, and then I got to see this jump up and then pull back. So when it crossed over, pulled back like that, I could draw my fib, and I could draw my fib based on this bar right in here. So based on that bar, I'm drawing a fib. I'm seeing 382. 382. It comes back and touches on perfectly. So there's an entry there, and that's what you see here. There's an entry here. We went ahead and used 618 as stop loss, and that made a 154 profit target here. Obviously, we could have went a little bit further with the profit. We didn't. That's fine. If you really want to get granular and understand exactly where we probably should have ended, we can look at something like this. Boom. And then this drops into 382. So this is 618. And go ahead and draw that out so you can see it a little bit better. So this is 618, and that would have been the profit target. It's actually pretty significant chunk, and would have pushed us up to 254, so 1% almost. I'm going to show you why I cut it short, though. Why I did not go for 618 on this particular play. And it has to do with the higher time frames. So if I go to the daily, you're going to notice that we had this 50 EMA coming in. So maybe I got out a little early, and maybe we could have really got out once we saw this bar start forming and ultimately close out right in here. Maybe that was the real play. There's a couple different ways to play it, man. Obviously, we're not going to be perfect, and so if I would have hit 618, I would have been right there on the 50. Okay, if I go to the weekly, there's one of these that it was pretty far push here. I think it was 4 hour maybe. Nope. That was it. I just ended up missing the opportunity, and this is why I'm glad I'm looking at it in real time. I ended up missing the opportunity because we got out a little bit early. But, getting out early isn't always a bad idea. In this situation, it actually wasn't warranted. Could have pushed up to the 50 EMA and actually had a profit target here. And all it is making a limit order, extending your limit order so that it cancels you out once you get there. So what I'm going to start focusing on moving forward is actual trade management and the style that I use for that. So it's pretty easy to place an entry, get it triggered, and then have a limit order in place, so profit target, and then you get hit, and then you're out of your position. I've had it to where I set a what I like to say, set a trap before I went to sleep, woke up, and the next day, I made 2% or whatever. It's fine. That's actually great. But sometimes your profit doesn't get taken that easily. Sometimes the profit doesn't happen like that. So we're going to talk about whenever it stagnates or whenever it's just kind of moving against you a little bit, when it's moving up just a little bit, but not a lot, and how to kind of deal with that, right? For me, it's mostly about saying, all right, I'm going to watch the price action, and whatever the price action tells me is what I'm going to react on. Okay, so then you start using alerts so that you can pay attention to what happens in real time, and as it's happening, that's when you're making your decisions. It's a little bit harder, more advanced. You really want to try to stick to the profit target with the stop loss, the 1% stop loss, straightforward like that, and let it play out as it plays out. But anytime you can get out of a position before it takes that full 1% loss, anytime that you can get out of a position that seems to be winning, but then price action just comes in, or volume comes in and goes against you, and that would have resulted in a 1% loss, right? You want to get out. You don't want to just keep stagnant positions in this trading game. Timing is important, and your setup should either account for that, or you should already know that you're not going to trigger your entry until a better time, right? So timing is super important. We'll talk about that in a little bit. All right, peace.